Hello everybody and welcome to our video. Today we're going to be talking about a couple of hot pieces of news in crypto. If you haven't already, subscribe, click the bell, and stay up to date with us. And be sure to drop us comments and let us know what you think. So the great state of Texas passed a landmark crypto bill for exchanges to comply. So the House of Representatives passed this bill on Thursday, April the 20th, and the Texas House of Representatives is really looking to get that proof of reserves for accountability and to deliver transparency for all of its users. Now, it does stipulate that the digital asset provider must submit a report to the Texas Department of Banking before the 90th day after the end of each fiscal year. Really good thing here. Now, it is required to include an attestation by the crypto service of outstanding liabilities to digital asset customers. Now, it must be established using zero-knowledge encryption and another industry standard of a comparable nature. But also, they have that there should be evidence of customer assets held by the person, documented using zero-knowledge encryption or something similar to that, and an attestation from an auditor stating that the information in the report is actually truthful and accurate. But is it good news? Well, the move by the House of Representatives actually was positive feedback from the crypto sector. Now, instead of, tightly regulating crypto exchanges or prohibiting them, it does give a green light to increase transparency for a variety of exchanges. Now they may eventually result in a bullish run here, but for Bitcoin and some other altcoins, but it does open the door for exchanges to operate freely. Now, after just a couple of minutes after this approval of the bill, Bitcoin did jump to 0.32%, but then eventually dropped to the lower levels and trades around right now 28,000, which is around a decline of 2.97% within the last day or so. As well, now there is the biggest long liquidation event for crypto in 2023, and that happened just a couple of days ago. Now, 260 million of longs were liquidated on the 19th of April, and that is the biggest liquidation that's happened this year. But we'll see, the year's still halfway through, not even halfway through yet. But now, 250 million shorts were liquidated on the 14th, and the most liquidations seen this year. Now, the cascades actually show that derivatives have actually grown slightly as the year progresses, and confidence with crypto continues, of course. Now, you can see on the chart here we have the future longs and liquidations in exchanges and the total liquidations altogether. Not only that, but the price plunging so means a lot for miners. And will they start turning off their rigs? Well, that's a good question right here. So Bitcoin is trading around 28,100, 7% of the April peaks. But looking at the performance, it does look like the bears are actually pressing on, anchoring on the 19 bear candle. Now, those losses were deep and reversed and refreshing gains. Now, the bar had decent trading volumes, showing that traders were eager to sell, but Bitcoin is trading below key resistance level established in April, and it was around $31,000 per coin in April 23, and the 2023 high remains a crucial reaction point that chartists are closely watching. Of course, we're all watching that moment, right? Now, the drop prices in 2020 also forced Bitcoin below the 20-day moving average in the middle of the BNB for the first time since the 13th of March. Now, it did rally in the banking crisis of the United States, but following the bank run of Silicon Valley provided tailwinds. That rally on the 13th of March, though, did give an anchor that saw Bitcoin rally over 55% in mid-March to around 31,000. And the hash rate is actually standing up around 355 EHSs right now. And this is because that the difficulty hash rate is depending on the set on the protocol level. So it really determines how easy or hard a miner can actually confirm the transactions, right? So this is kind of showing a lot of things. So that following that 90% surge in December, the difficulty is actually going more and more and more. But the past 5 sessions, Bitcoin has adjusted difficulty towards around 48.71, with the last adjustment on the April the 20th. the 20th of April. So this year alone, Bitcoin actually has the difficulty increased by 41%, meaning that miners have to use more computing power to discover blocks. Now, that's all we have for today. Thank you for watching. Let us know what you think. Is it going to raise the cost for more equipment, or are they just going to shut this down, or is it worth it at this point? Well, we're going to see. Let us know, drop a comment below, and follow us for more crypto news.